Over the last few decades, investors have lost more than £1.5 trillion, which could have easily been avoided if they'd looked just a little harder at one single thing. What's crazier to read is this incredible statistic from the Financial Times article released this week. It says this: investors in hedge funds have paid out almost half of their profits in fees since the early days of the industry more than a half century ago. Managers generated $3.7 trillion of total gains before fees, but fees charged to investors were $1.8 trillion, or about 49% of gross gains. So just imagine this for a second. You invest your hard-earned money with some expert fund managers who claim to know what they want to do with it. They then charge you half of it for the pleasure of managing your money. And the worst thing of all is that most managers don't even beat the returns of the market. Now, just before you switch off and think that this doesn't apply to you because you're not investing in fancy hedge funds, think again. No matter how much you're investing or where you're putting your money, you're going to have to pay some fees somewhere. They're one of the only things you can control when it comes to investing, and over your lifetime, you'll likely pay tens of thousands and maybe even hundreds of thousands of pounds worth without even realizing it. Okay, let's start from the top and work our way down through all of the different types of fees. You'll see terms like platform fees, account fees, transactional trading fees, fund fees, currency FX fees, and even stamp duty. Not everyone in the industry will use those exact terms, so it can make working out costs pretty challenging, especially when you try and compare them between different providers. Now, on that note, this is a good place to start. Whatever platform or investing app you choose, this is going to have a big impact on how much your investing will cost you over the long run. Some investing providers are going to charge you every month, no matter how much you've got invested, and others are going to charge you based on how much you have with them. Basically, some offer fixed costs and some offer variable costs. Generally, if you've got a bigger account, you'll be better off with the fixed costs, and if you have a smaller account, you'll be better off with variable ones. On the other hand, if you can find a provider that doesn't charge account fees at all, then this is obviously going to be more preferable. Personally, I'm a big fan of platforms who save people money and don't charge any account fees. Now, a good example of one place I use is InvestEngine. Now, I use them for my stocks and shares ISA, and I also invest my business cash here too. There are no account fees and no platform fees for DIY investors if you want to choose your own investments. If you want to get yourself started with InvestEngine, they offer all new customers a bonus of up to £100, at least running until the end of January. All you need to do is make sure you register and deposit at least £100. I'll leave a link in the description for you if you do want to get started. I also do regular portfolio updates every month, so feel free to check those out if you want to see how I invest my own money. Now, just one more point on this topic. Account fees and platform fees are really important to understand, as you could quite literally have exactly the same investment on two different investing apps, but get two very different outcomes. If one company charges you 1% a year and the other one charges you nothing, then this will snowball and slowly eat away at your returns. So whether you're brand new to investing or you've been investing for a while, check your fees just to make sure that you fully understand them, and if you can reduce them, I think it makes total sense to do so. Obviously, that's all up to you to figure out, but dig through the websites and see exactly what you're paying. Anyway, the next layer of fees is all about buying your investments. Again, just like the account fees, some platforms will charge you a fixed amount to trade, some might charge you a percentage, and others might charge you nothing at all. There's always a lot of devil in the detail here, so just try and work out what you'll be investing in, how often you'll be buying and selling, and then try and work out what that's likely to cost you. If you're someone who likes to tinker and you'll be making a few trades of UK shares and US shares, you've got to see if this is going to cost you a fortune on your current platform, or if you're better off somewhere else. For example, some of the legacy providers charge a lot of money per trade, no matter how much you invest. Compare that to the newer platforms that let you trade with no fees, and you can easily see how you can save a fortune in the long run. I'm not going to run into too much detail here, as I did do a video covering the best platforms a while back, and you can find that one on my channel. Anyway, like I said, work out how much you're going to be buying and when you'll be buying, and then work backwards from there. If you're investing a couple of £100 per month and being charged £10 every time you make a trade, that's a huge amount of money to pay. £10 in fees on a £200 investment is 5% of what you're putting in. Now, that's about the money the hedge funds charge just for the luxury of letting you invest in them, and we all know how much they make in fees, so try and avoid them if you can. Next up, we need to talk about the fees built into investments like funds and ETFs. Now, these charges have nothing to do with the platforms themselves, and you'll be paying these no matter where you buy your investments. Also, these fees are built into the investments themselves, so no money actually changes hands here, which does actually make keeping track of them a lot harder. If you're searching for a mutual fund or an ETF, you should be able to easily track down the total expense ratio, often shortened TER. This will be shown as a percentage, and that amount is annualized. So this is the equivalent fee if you held the investment for a whole year. For example, if I open my InvestEngine app now and I search for a very popular investment, Vanguard's S&P 500 fund with the ticker VUAG, I can see that the total expense ratio is a very small 0.07%. This means that if I had £10,000 invested into this fund, 0.07% would be lost in fees over 12 months. This is the equivalent of just £7 each year. Now, for some perspective, this would be considered a very low-cost fund, but there are plenty out there costing a lot more. Now, some actively managed funds might even cost 0.75% or even 1% a year. Now, that might not sound like much on the surface, but this really does add up. Let me run a quick example just to show you what this could mean, even if you've not got millions to invest in hedge funds like I mentioned at the beginning. Let's say two people invest £200 a month for 20 years. They both invest in exactly the same fund, except one of them uses a more expensive platform and ends up with a whole host of fees. The person with no fees makes 10% a year on their investments, and the person with fees ends up making 8.5% a year. The person investing smart, keeping their fees low, ends up with £145,105. Looking good. Now, what about the person with those 1.5% fees every single year? It might not sound like much, but it all adds up. They end up with £121,650, which is almost £24,000 less than their much smarter friend who kept those costs low. Just think about it like this. That's the equivalent of more than £1,000 per year lost in fees, which is more than £80 a month. For someone putting in £200 a month, I don't think I'd like to find out that fees have been costing me £80 a month in lost potential. But that is why they are just so important to manage and keep as low as possible. Even fees that sound small can add up over time, and the longer you invest for, the bigger the impact they have. Now, the final set of fees are only going to apply if you're buying shares in a different currency or if you're buying UK shares. If you're a UK investor using pounds and you want to buy a US share like Apple or Nvidia, then you'll need to convert your money to dollars at some point. Now, some platforms let you do this all in one go for a small fee, and others will charge you as you make each trade. The cost of converting your money varies massively between different platforms, and I've seen some places charge you 1% just to convert your pounds. This is a huge cost, and it means that as soon as you place that order, you're already 1% behind, and it's going to be the same on the way back too. If you want to keep those costs low, you might want to look at another app that I use like Trading 212. Now, I've got another stocks and shares ISA here as well as my emergency fund. And if I wanted to buy a US stock like Tesla here, just as an example, the currency exchange fee is just 0.15%. If you want to sign up for a new account, I'll leave my link in the description below. You can get a free fractional share worth all the way up to £100 if you open an account and deposit just £1. Now, if you do need to do it manually, make sure to use the code Toby in the promo code section of the app, which is right here. Now, as well as the currency exchange fee, the final fee I wanted to mention only applies to buying individual UK shares. Unfortunately, we have the pleasure of having to pay stamp duty every time we want to buy UK listed shares. This fee is 0.5% and there's no getting away from it. As a quick example, I'll show you what happens if I wanted to buy £100 worth of AstraZeneca here on Trading 212. As you can see, I have to pay 50p in stamp duty. That's taken off immediately and is done every time you buy a UK share. But thankfully, it's not done when you sell it on the other way around. As a bit of a top tip, you don't have to pay stamp duty when you use ETFs at least. So if you do want to buy UK shares inside of a fund, you won't have to pay it yourself. Obviously, the fund will end up taking the hit at some point, but at least you don't see it. Now, all of the fees I've just mentioned add up and can have a huge impact on what you might end up with as a long-term investor. However, there's one last thing that's always worth remembering to do. If you want to avoid paying taxes on top of those fees, then you absolutely must make sure that you're using the right type of investing accounts. Now, I've gone into a lot more detail on this in other videos. However, it's always worth a quick mention to say that if you are using a stocks and shares ISA or a self-invested personal pension, you don't have to worry about paying any kinds of dividends tax or capital gains taxes along the way. All money invested in an ISA remains tax-free no matter when you take it out, and money growing in a SIP stays tax-free too. The last thing you want to do as an investor is have to worry about all of the fees I've just gone through and then add on taxes on top. There should be no excuse not to be using some kind of tax-free investing account, but I've been there and done that in the years gone by, so I'd say just check to make sure that you aren't using a general investing account, sometimes called a fund and share account, completely by accident, because like I said, I've been there and I've already done that. If you are, you can always move those investments into an ISA or a SIP. You just have to sell them and rebuy them, so long as you have the ISA allowance remaining. Anyway, I hope that's been a useful video for you. If you're starting out new, make sure that you try and keep your fees as low as possible and choose an investing platform that's going to help you to do that. Likewise, if you've been investing for a while, ask yourself the honest question if you're getting some good value at the moment. Staying loyal to an investment platform that's having your pants down in fees is basically handing someone money for nothing. Now, if you're brand new to all of this and some of this might have gone over your head, don't forget to check out my Investing for Beginners guide here. And if you need some help on finding the best investments, check out here some of my top picks for the best ETFs to buy this year. I'll see you in the next video. Happy investing.